Yo, what's up you guys? Welcome back to another video. Today's video, we are going to revisit the NFP data that got released, and I'll give you my overview of why I think the data is not exactly what it is, so what they are trying to make us believe it is. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you do enjoy the content, please do consider smashing that thumbs up button, and let's try and get this video to at least 100 likes there as well. Now, you know that the jobs report came through positive and unemployment claims dropped lower on Friday as well. But the big question is, how is all of this happening when there is so much not going right currently in the US? And I'll give you an example of what that means. Firstly, we know that unemployment claims were increased a lot throughout the month of April, right? There was a lot of people who filed for unemployment claims, but that's not the only reason. There's a lot of people that are losing their jobs, especially in the tech sector. Tech sector refers to top tech companies which are listed on the Nasdaq, or the stock companies like Apple, Amazon, Shopify, whoever you want to think about, right? If there's so many people filing for unemployment claims, how is the unemployment rate dropping, and how did they add more jobs? Well, I can only think of two reasons. It's either the report is not what it says it is, or there is companies that are not reporting on their people that are being terminated, people that are losing their jobs. As a result of that, the unemployment rate is not increasing. It could also be of the birth ratio also, where depending on the amount of companies that dies versus new businesses that are hiring people as well. Maybe they're not taking into account companies that are closing and people that are losing their jobs. Maybe they're only looking at new businesses that are hiring people, which is not how the data is supposed to be collected. Now, this is not the first time that this report looks like it was made by a 5-year-old, and you just have to believe it because it's a child. But we know that back in December, we saw this as well. It says here Biden is lying about the jobs data. Now, you can go through all of that information, but we see here that unfortunately things aren't nearly as good as the White House and its accomplices in the corporate media would have us believe. Now, we are seeing the same thing at the moment here as well. My question is, how? Because we don't have access to this information. We can't see this data, right? So we have to go based off what the media is saying. If they say that they added 300,000 jobs, they have added 3,000 jobs. We don't know how true that information is, but obviously the market is going to react to that as well. Back in 2016, same thing. The job report is a perfect example of fake news. Now, we know that in the past people had come out and they basically have had their saying about certain reports that made absolutely no sense. Now, let's go and take a look at why this report could potentially be very misleading there as well. If you go and have a look at April in particular, because the report was released in May for April, we can see over here that if you just scroll through April, which is going to start over here, the unemployment claims came through 228k, right? Higher than the Dow Jones expectations. Unemployment claims, again, 239, higher once again. Unemployment claims from April, once again, 245, higher once again. Yeah, 230k, slightly less than the 245k. It doesn't make that much of a difference, but you see how high these numbers are here as well. Job Openings, which is a company that basically surveys this information from a lot of companies there as well, came through 9.59 million. Unemployment claims, once again, higher, 242k based off the previous month's information there as well. Out of the 4 times that this data was reported, 3 times it was higher in April. But guess what? Unemployment came down from 3.5 to 3.1%, and they still say that they were able to add 253,000 jobs, ladies and gentlemen. Now, I don't know what you make of that, but look, from where I'm sitting, the dollar is probably going to head down the ground when things become too much to handle for the Feds, to a point where they can't not basically give us that information anymore. Now, if you think that's bad, we do have what's known as CPI information that's being released tomorrow. Now, the CPI data, that's basically the consumer spending index, which measures what consumers spend on a basket of goods and services. Now, we use this CPI report to do what? To basically gauge what inflation is and how it's doing. Higher inflation means higher interest rate, means stronger dollar. And I guarantee you, this inflation report tomorrow is probably going to come through higher, just to give the dollar index that boost that it requires once again. Coming back to the jobs report. Now, this is an article from Insider, right? It says here that there's a lot of tech companies that are getting rid of their people. Now, this was updated on the May the 4th. May the 4th be with you. That was last week. Now, I want you to go through. This is a long list. You can see this list just by looking at this ball over here, right? Here you can see that Shopify employees are latest to be hit with a wave. Listen to that properly. A wave of layoffs as the company cuts 20% of the staff. Over the past few months, layoffs have expanded outside of the tech, media, the finance as Gap and Whole Foods announced cuts. Now, you can go through this entire list over here, basically, and you can go through all of them and see how many people will lay off per company to give you an indication of where it is that I'm going with what I'm trying to indicate to you here as well. It says here a wave of layoffs that hit dozens of US companies towards the end of 2022 shows no sign of slowing into 2023. Now, how is it that people are getting laid off from work, but the US, according to the administration, they are adding jobs on a monthly basis? Are they only taking information from people or from companies that they want to change? Like, hey, did you add more people to your... Okay, we'll take your report. Did you add any more people? I didn't add any. Okay, we don't want to hear from you. Hey, because we need to make the report look good. Unfortunately, everything is giving us an indication that things are going very, 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 very bad for the index, but for the dollar. But they are not being transparent with us to a point where they say, you know what, we don't know what to do anymore. But you know what, it is what it is, like my good friend Trump used to say over there as well. Now, you can go through this entire list over here also, but I'm going to cover the last section of this. It says here, the layoffs have primarily affected the tech sector, which is now hemorrhaging, or whatever that word is, employees at a faster rate than any point during the pandemic, right? People are losing their jobs faster than what they did during the pandemic. Now, how do you get an unemployment rate that's coming down and you get unemployment claims at sky, but they're able to add more new jobs? Like, hey, you're fired. No, it's just joking. Come back. It's just fine. Go do your work. Like, is that how they operate? No. Tech companies slashed more than 87,000 jobs just in 2023 compared to 80K in March to December and 15K in 2021. Now, that is my main question. They have slashed 187,000 jobs, and there's nothing about that on the jobs report there as well. My friends, you can go through all of this, right? Shopify, 20% of their workforce. Morgan Stanley, 3,000 jobs. Dropbox, 16% of their staff. Gap, more than 2,000 jobs. Jenny Craig, potential massive layoffs coming there as well. 3M, 6,000 jobs. LFYT, 1,072 roles over there. There you go. People are losing their jobs, but the data is telling us that no, Hakuna Matata. What a wonderful phrase. They're telling us, don't worry, my friend. Now, okay, let me just take a deep breath. Now, with that being said, right, the dollar is obviously going to be forced into a situation where, because there's only so much that you can do, right? And the thing is, the quickest way to work yourself towards an inflation, not inflation, to a recession, is to get people into a point where they're unable to afford, so they spend less. Signs of recession is where people start losing their jobs, companies start making less, reporting less on their earnings, and we see all of that happening at the moment. But it's not being told to us, not being said to us. They're giving us what we don't want to know, don't want to see. Now, this is what I would like to end this off, right? Now, the dollar index is now currently trading at support. It just found support at the moment, right? However, think about it in this way. A positive job report came through last week, Friday, right? The dollar came into that consolidation on Monday, the 17th of March, and the dollar is still stuck within that consolidation even after the job report data came through positive. Now, if investors took that information and said, you know what, we believe what you're saying, I think the dollar would have made its move a long time ago. Unfortunately, the poor index is still stuck here and it's got nowhere to go because nobody is telling us exactly what's happening. Now, again, as traders, always have to be reactive and not predictive. Now, the index has got two ways to go. We also got gold that's got two ways to go here as well. Let me just remove that. We also got gold that's got two ways to go. But there's too much uncertainty in this market. I believe gold will continue bullish, and I believe the stock market will once again continue this bloodbath to the downside once again. And you can see how the stock market was very bearish, and it just started to pick up itself once again. Now, you know it, I know it, that the Nasdaq is still bullish because the market is trading in bullish territory, potentially a slight move to the upside, maybe some clearance, but that's about it. The index once again will continue this consolidation phase that it's in. Nothing much to see over here, but I'm telling you guys today that we have the Nasdaq potentially clearing that. We've got gold clearing this, and then we have the index clearing that consolidation phase. That's about it. That CPI data tomorrow should come through higher. Why do I say so? Because if you are creating more jobs, it means people are making more money, which doesn't make any sense. Because why would companies lay off people if they are making money? Because consumers are spending, right? No, they're not, because they don't have the money. So who's lying? Is it me? Is it the feds? Nobody knows. Other than that, we'll wait and see what the CPI data says tomorrow. That could potentially also just be a whole lot of BLS. And I'm not saying BLS for BLS also. But that is it from my side, guys. I first want to say thank you so much for your time. I hope you enjoyed the video. If you did, please consider smashing that thumbs up button. Thank you for your time. And as always, I will give you guys an update on the CPI data once it gets released tomorrow. And as always, cheers, videos.